So critically appraise the audit report. So say good things and bad things or whatever about the audit report for the year end prepared by the audit senior, but don't redraft the extracts, just talk about the audit report then. So let's have a look at this audit report. Basis of opinion. Evidence available to us in respect to the intangible asset capitalised was limited because of restrictions imposed on our work by management. As a result of this, we've been able to verify the appropriateness of the amount capitalised, and we are worried that the asset may be overvalued. Because of the significance of the item and the lack of integrity shown by management, we've been able to form a view on the financial statements as a whole. So the opinion, disclaimer on view given by financial statements. Because of the lack of evidence that we could gain over this intangible, we're unable to form an opinion. So basically they've given a disclaimer of opinion then. So let's have a little read of this. You're the manager responsible for the audit. The audit is nearly complete. You're reviewing the draft audit report. You're aware that Willis is developing a new drug and there's been lots of research and development costs, most of which have been capitalised. The asset is valued at 4.4 million. So 4.4 million, and we're worried about, should it be a capital or should it be expense? If it was expense, they've got a profit of 3.1, which if it should have been expense then would make it a 1.3 loss, wouldn't it? Don't know what's happened there. Anyway, having reviewed the audit working papers, you're also aware that management has not allowed the audit team access to the results of the scientific tests performed on the drug. So that's why there's a limitation of scope. So critically appraise the audit report. So the first thing we say is, well, they're using a disclaimer of opinion. So first of all, just the opinion itself, and you say that you should use this when you are unable to obtain sufficient and appropriate audit evidence over an item, and where that item may have a material misstatement that is material and pervasive. That's when we use a disclaimer. So here, in this scenario then, there is a lack of evidence regarding the research and development. Okay, we haven't been allowed to see whether the scientific tests show that it's working or not. So a limitation on scope seems the right thing. But what we need to know then is what the level of this, because we've given a disclaimer. So I'm just thinking here, is a disclaimer of opinion too harsh? Maybe it should be just an except for, because it's only about that one thing. So maybe an except for paragraph would be better. However, just reading it, they said that management has not allowed the audit team access to the results and trials. So therefore, and it's going to turn a 3.3 million gain into a 1.3 million loss. I think that's the big thing as well, isn't it? 3.3 million to 1.3 million. I think this is, I think it would change. It changes the whole perception. Changes the whole of the accounts. So I think actually a disclaimer is correct. Okay, so I think that's dealt with the opinion. Let's have a look at the report in a bit more detail then. So, basis of opinion. Evidence available to us in respect of the intangible asset capitalised. What intangible asset? So we're critically appraising this. So the intangible asset capitalised. I think maybe be a bit more precise. So more precise wording. Use the research and development costs. Okay, I think that would sound better. Because of restrictions imposed on our work by management, as a result, we've been able to verify the appropriateness of the amount capitalised, and we are worried that that's not very professional. Doesn't sound like very formal language, which is what it should. Because of the significance of the item and the lack of integrity shown, I don't think you should be calling into account the lack of integrity shown. You might believe it, but this is not the place to talk about it. So the lack of integrity, again, unprofessional. We've been unable to form a view on the financial statements as a whole. Okay, opinion, the disclaimer on view given by financial statements. Again, not great wording there, is it? Not disclaimer on view, the disclaimer of opinion is what it should say. Yeah, what have we got in here? Because of the lack of evidence we could gain over the intangible, we are unable to form opinion as to whether financial statements are properly prepared in accord with the relevant financial reporting framework. Okay, yeah, well, I think we've probably said enough about that. So far, so good. I think that's the critical appraisal of the audit report. Other things that you might want to say. Well, actually, let's have a look. Talk about any other matters. Let's have a look at note number 2, because that's what I was just thinking of there. Identify and explain any other matters to be considered and any actions to be taken because of this management imposed limitation on scope. So, in terms of this then, any other matters regarding this, if you ever do have any modification to your audit report, you must always tell those charged with governance, which is normally the management. So always tell them that, include the wording, so they're aware of what's about to happen. Also, if there's been any imposed limitation of scope, because it's the management that was stopping us, we must also tell those charged with governance, let them know fully what's going on. Then we think about, well, could we have any other procedures to try and prove whether this drug is working or not? And here, I think the scientific test results are absolutely vital. So, probably impossible, really, to have sufficient evidence from any other procedures. The fact that they stopped us, though, is the thing that really worries me. It's the integrity of the management. Why are they stopping me? It's imposed. And yet, access to books and records and things is a precondition of an audit. It's one of the auditor's rights that we must have this. So, immediately, I would ask for an engagement quality review at the very least, because it's now a higher risk. I now see the management in a different light. And in fact, I'd go so far as to say, consider stepping down, consider withdrawing from the audit. If not this one, then definitely the next one. And if you are going to do that, you're going to have to take legal advice as to who you tell and as to why, because the integrity is gone, the preconditions have been broken, so I think you definitely need to consider withdrawing. Okay,